In this video, I want to talk a little bit about Facebook, and we're looking at this pattern that's coming in here right now. And I want to just draw a couple of trend lines for you. And the first thing I want to do is just draw a trend line across the bottom of those two points right there, those two low points. And as you can see, that market has a nice area of support across the bottom there. We have 3 hits on it right now. And now I want to come in and I want to draw another trend line for you. And we're going to just draw a trend line all the way from this point up here all the way down to the point of that triangle. So we've made ourselves a nice little descending triangle formation, or a descending wedge, as you can see here. Now this is considered a continuation formation, anticipating that the market's going to break and drop out the bottom. Now it doesn't necessarily have to do that, because the probabilities at this point are that the market could also rally and break out the top, right? And so we can play it both directions. Now, classically speaking, or traditionally speaking, we would anticipate this market dropping out the bottom. So I'm going to do the count on this thing. And we count this from the top. This is 1, down here to 2. This is 3, 4, off of support and resistance. We bounce off of resistance one more time with the second hit. That's 5. And we expect at that point for the market to break. Oftentimes we'll see a rally or a rebound coming right back up and using the area of support as resistance, and then we get a second drop once again. And that's kind of the classic move that we generally see with this type of a pattern. So you want to be aware of those. Always look for your count. 1, 2, 3, 4, 5, 6, 7, 8. And that's kind of how we look for this count. Now, if you notice something, I'm going to take a measuring tool. Let's just use a dollar calculator, and we're going to measure from the top of this trend to the bottom of this trend. All right, and that's generally how far we see this next trend drop, okay? So we generally see this trend drop from this 5 point down to equal to this previous trend here. Now there's a little bit of controversy there whether that high peak is the one you should go off of, or this one right here, discounting that one high peak, because the trend is right along here with the area of resistance. Either way, it's just kind of a shot in the dark. This is kind of how far we anticipate it going. In general, you'll get an ABC pattern inside of that drop. So this is kind of classic pattern recognition, and the way we would trade that is, obviously you would look to pick up a put option to the downside to take the breakout to the downside, and possibly buy a call option as protection in case the market started to rally. So you would do either a strangle or a straddle at this point. Also, you could go one step further and do an iron condor, where you would sell a call and a put at the money and then buy some wings out here, either a call, buy a call above and buy a put below to protect yourself. So either way, a nice way of taking advantage of a nice little descending wedge formation.
Hi, my name is Lan Turner, and if you enjoyed this video, go ahead and subscribe to our channel and click the thumbs up, and make sure you click that little bell too, so that you can then be notified next time I post a video just like this one. If you've enjoyed this video, stop by our website, www.tradementors.com, and check out all the things that we have available there for you as well.